Hello everyone. Budget 2021 was submitted in the Parliament on 1st February 2021, and this has been presented when the Indian economy, or rather world economy, has been facing a significant amount of stress. In the year 2019-20, Indian economy saw a decline, and last week of March 2020, the entire country went for a lockdown. For over a 4-month period, the entire country was locked down. So we saw a 23.6% contraction in the economy in the first quarter, and then about 8% contraction in the second quarter. Overall, it is estimated to be about 7.7% contraction for the year 2020-21. So in this background, budget has been presented to enable growth and kickstart a growth, and then to achieve a growth of about 11%. Even International Monetary Fund estimated that India will grow probably one of the fastest growing economy post COVID at 11.5% in the year 2021-22. To achieve that, I think there is a significant push needed on government spend, and not just spend but also on a long-term infrastructure spend. I think government has done that precisely. Especially the deficit financing has been under control for several years, starting 1991 onwards, and then because of the fiscal deficit consolidation and discipline bill that the Parliament enacted on themselves, it has been under 4% for the last several years, and this time India has breached that, and then the year 2020-21 would have a 9.5% fiscal deficit. This is significantly higher compared to even many years past. In 2021-22, it is expected to be at 6.8% and taper down to below 4.5% by 2025-26. I think this is a very, very bold statement that the government has made, because otherwise the rating, simply what the government had said is, we care a damn about the rating agencies, international rating agencies, because they look at it as if the fiscal deficit is higher, they rate you lower. Even for last 2 decades, the economic survey submitted 3 days before also recognized that the international rating agencies have underrated India's fundamental parameters for last 2 decades. And I think, they have just given enough is enough, and then went ahead with what is needed for the economy. Spending, government spending, government spending, government spending. I think that's what the mantra that, Mrs. Nirmala Seetharaman has followed, and that too very prudently. Whether it is a spend versus prudency, they chose the spend as a theme, and that too approached it with a 6-pillar Atmanirbhar Bharat initiative, the self-sustenance of the Indian economy. I think that's where the government went in, and they expressed a long-term vision and commitment towards the infrastructure build and economic build. I think these are the very big theme under which the budget has been presented. As I talked about, apart from the fiscal deficit, also the rating agencies used to look at where the government spend is going to be. Okay, they encourage a lot of government consumption, which is part of the GDP, but not on infrastructure and asset building. Last several years, only what is left over was invested in infrastructure. This time, government is borrowing to build an infrastructure, because government spend on infrastructure carries about 6.5 to 7 times the economic activity, and that is what government is envisaging. About 5.54 lakh crore is being committed, earmarked for infrastructure build. I think that's a significant amount of money. Also, government has announced that they are going to form a developmental finance institution with a 20,000 crore outlay, but this actually is a repeat of IDFC, which existed in the past and then but couldn't do much. So we need to see the devil is in the details, and then we need to see how much of this DFI that's going to contribute and how different this is. Second thing is on healthcare. I think health and well-being has been the significant amount of concentration, especially post-COVID. Nutrition for the people, healthcare, quality air, and quality drinking water supply to every household. I think that is a theme that government has envisaged in this budget. I think that's a very, very welcome move. Also, government has earmarked about 35,000 crores for vaccinating the population. Is 35,000 crore enough? The finance minister assured that if more is needed, she will be willing to put that money into the economy for vaccinating the people, because people is more important for the economic growth. At the same time, my expectation was that government should have allowed private partnership in vaccinating the country, like allowing the CSR expenditures to be used for vaccinating the poor, and also to use that funding for vaccinating the employees. I think if government had used the private funding also for vaccination, that would have been a very welcome move. Another big push is on monetizing the existing asset. I think this is not done much in many countries. Of course, the developed countries like USA, the monetization of assets have been done, but this time government has plunged itself to say that existing asset would be monetized. What does this mean? Monetization mean actually converting the existing assets of national highways authorities or railways or port or airport, or even including the distribution company, electricity distribution companies, can be privatized and then converted that into a infrastructure investment trust units or real estate investment trust units, and then even public can participate in those units, which means government has shown a very good intent that they are willing to build a asset and then mature that asset and then hand it over to the public for as part of the monetization. I think that's a very big move, using the existing asset to fund the new infrastructure build, so that economy will kickstart and then keep running at a significant pace to achieve 11% growth and a double-digit growth for the subsequent years. Another great move is about forming a bad bank, okay, or rather in simple terminology, it is asset reconstruction company. Once again, the devil will be in the details to it. We will see what the provisions for this bad bank would be, but at least the intent is shown that the bank's NPAs are furthermore stretched, bank balance sheets are furthermore stressed because of the COVID, and the NPAs will be increasing. So this bad bank would acquire those NPAs from different banks and then start managing the recovery process, rather than allowing the banks to do that and then allow the banks to perform their own activities efficiently. The caution here is the asset quality to be reviewed very consistently, so that it doesn't enable the nationalized banks or private banks to once again go back to imprudence, or once again be lethargic on lending, or create a bad lending and create further NPAs. I think the asset quality review must be strictly followed. In the past, RBI has not done its job very efficiently. I think RBI should jump into that and then create a formula for analyzing the asset quality of every bank. Another thrust area had been disinvestment. Disinvestment of 1.75 lakh crore by privatizing, selling Air India and few public sector banks and other identified public sector undertakings, and also listing and IPO for LIC. Very, very welcome move. Government should exit out of every business is most welcome. At the same time, it is very disappointing to see that government has not shown a clear intent on going aggressive on this disinvestment. There are over 4,000 PSUs that are already sick or loss making or not making any big monetary gain, and taxpayer money is getting invested into it through various ministries. I think government should have at least identified a roadmap or announced a roadmap for liquidating companies that are not making sufficient amount of profit or doesn't make any economic or commercial sense. Liquidated and then create they have a lot of assets that could have been monetized, and for all the profit making Navaratna companies monetize it, like LIC is getting into stock market, like many other companies could be identified and then for listing in the stock market, which with a higher valuation government would get a lot of money. Government should exit operating these organization, but nothing wrong in having a stake in those organizations and having a control over those organizations. Government has done that in Maruti Udyog before, SBI, in Indian Oil Corporations, and many other companies in the past. I think government should go very aggressive on that. I think they should have shown a big, intent on that. Another thrust area had been education and especially on R&D. Government has earmarked about 50,000 crores for next 5 years as a very welcome move. But government should have also gone one step further and then said encouraging the private participation in the R&D. I think that's a key for sustained growth in this economy. But the budget has not highlighted or acknowledged the stress that is in the education industry or sector. More than 50% of students in the country have not had education or proper knowledge imparting and proper education in this in this year because of COVID lockdown. Even now, the rural or village or hilly areas or tribal areas schools have not been functioning, and how this knowledge gap would be bridged, because this is not going to happen over the next 1 year itself. It has to take a period of about 2 to 3 years to even bridge this gap. I think a recognition and acknowledgement would have kick-started some thinking process from the government side on this area. Lot of people expected income tax rebates and concessions to come in. In fact, my pre-budget presentation and video, I said that I do not expect much on that. Nevertheless, something government should have given, like a 6.8% deficit. It is not going to pinch more if it had become a 7% deficit financing, but given something to the lower income group and then middle income group taxpayers, at least giving some amount of benefits on increasing the medical insurance. People would have gone for medical insurance contribution, or some savings induced incentives like chapter 6A rebates could have been increased. I think government should have thought about it, because while the supply is strengthened, while the job market job increase or job market is strengthened by infrastructure infusement and ensuring that there is a continuous supply of cash into the hands, but giving some amount of money into the hands also will fuel consumption. Consumption-led economy also could have kicked in. I think that is something that is lacking in this budget. Interest on PF over contribution, anything over 2.5 lakhs is criticized by a lot, but in my opinion, I think that is required, because if someone is contributing more than 2.5 lakhs per annum as an employee contribution, which means they would be having a minimum basic salary of 30 lakhs or total emoluments in the range of 75 to 80 lakhs. So any voluntary contribution which gets a tax-free interest of 8% more should be discouraged. I think government is slowly pushing in this area, which is welcome. Agricultural development cess that is the government brought in during this budget is once again criticized a lot, but I think I feel that it is a protectionist mindset. This agricultural development cess is not charged on every product, it is on import of many products. Say for example, Apple carries a 35% cess on that. Import of Apple is charged so that the price parity is maintained for Simla, Himachal Pradesh and Kashmiri apple that is made available in India, so that the import of apples do not eat into that market and then kill that market. Same way for various other pulses also this agricultural and development cess has been charged. I think that's a very welcome move. Once again, it is also charged on petroleum products, petrol and diesel, while the government has clarified that the basic excise duty and special additional excise duty is adjusted towards it, which means the states would lose, because the basic excise duty is part of the devolution fund and then states gets about 42% of that excise duty, whereas cess is not part of the devolution fund, so the states would lose. But the caution here is, in future when the excise duty is revised, the government should always keep in mind that there is already a cess that is being charged, and hence accordingly make this move. The last point is on agricultural sector. Agriculture is a hero for 2019 and 20 economy, almost 3.4% growth. Only a sector that has seen a significant amount of growth. 3.4% may look small, but when you look at the volume, it's a very large volume of growth that has happened. So more reforms were expected, like identifying or classifying micro, small, medium and large farmers, and then targeting these smaller farmers, micro, small and medium farmers for benefits like fertilizer subsidy or procurement on MSP from them would have been much more ideal, so that the benefits reach them. And also something like natural organic fertilizers, no grant has been given. I think government should have looked into it. Likewise, another reform that I expected is distinction between farmer and farm produce trader. Even a farm produce trader who has a little bit of farm holding treats all the farm produce trading as agricultural produce, say agricultural income, and then not being taxed. I think this differentiation should have been made. Nevertheless, this budget for a current economic scenario, I would give 8 out of 10, and this budget definitely is going to fuel growth for this country, and a lot more to look forward to. One of the early indications is that stock market never ever in the last 2 decades on a budget day, there has been knee-jerk reactions, both negative or positive, but it has come to standstill, or it has come back to reality in the subsequent day. But last 2 days stock market is reacting. I normally don't look at stock market as an indication for economy or parameters of economy, but it definitely shows that there is something good in the budget. There is a good intent that the government is showing, but the intent needs to be carried forward in action. I think that's where the crux will be, and that's where the finance department's job would be and government's job would be. Lot more infrastructure development happening. Electricity distribution companies will be privatized. Although lot many things will be criticized by the leftist ideologists or by people who have entitlement mentality. But in my opinion, I think this is one of the best budget presented by this NDA government in the last 6 years. And when Mrs. Nirmala Seetharaman called this going to be a budget of the century, probably yes. But as long as it remains in the paper, it is definitely budget of the century. But one needs to look at how this is effectively implemented. And once it is implemented, at least in spirit, I think India will see an excellent future. Thank you for watching. Please do share your comments and feedback and questions if you have. I'll definitely like to answer them. Subscribe to my channel, and also in the next 1 week to 10 days, we will look at individual sector wise the impact of the budget and also what this government has tried to do through this budget. Thank you very much.